Now, I will talk about Mr. Amiruddin financial profile. The first one is personal. Mr. Muhammad Amiruddin is 35 years old Malaysian who works as a bank officer in Kuala Lumpur. He is married to Miss Shafiqah, a teacher who makes RMs 36,000 a year. They have a son who is 12 years old. Mr. Amiruddin is the main breadwinner for his family. He has to make sure he can pay his personal bills while also taking care of his family needs. The second one is income. His job is his main source of income, and he makes RM 78,000 a year. In addition, he gets a bonus of RM 1,000 and dividend of RM 450 from Amanah Saham Bumiputra, which brings his total annual income to RM 79,450. This shows that he has steady jobs and little investment that help him be financially solid. The third one is asset. Mr. Amiruddin has RM 35,677 in saving and gold worth RM 4,485, which include both investment in gold and accessory. This means that he has spread out his money between short-term savings and long-term investment, like gold, which is widely thought to be a safe asset. Next, liabilities. Mr. Amiruddin, like many middle-class Malaysians, needs to pay bills. He has a loan for a house for roughly RM 200,240 and a loan for a car of RM 55,560. These debts are big, but they are for basic needs, a place to live, and way for his family to get around. Lastly, for the summary, in general, Mr. Amiruddin's financial situation is similar to that one of many middle-class families in Malaysia. He has a regular job, some investment, and some debt he needs to pay off. The Income Tax Act of 1967 also lets him get tax breaks because he has a working spouse, a child who depends on him, and a house loan. This mix of income, asset, and debts make it both easier and harder for him to plan for his financial future.
For our methodology, we followed a systematic approach that involved 5 main steps: data collection, verification, tax assessment, analysis, and report preparation. All of these were aligned with the Malaysian Income Tax Act 1967 and the Schedule of Tax Relief 2024. In the first stage, which is data collection, we interviewed our selected taxpayer, Mr. Muhammad Amiruddin, a 35-year-old bank officer. We used the personal profile template provided in the assignment to make sure we gathered the complete information. This include personal and family details, income sources such as salary, their bonus, investment, asset like saving and gold, and the liabilities, including loan and also charitable commitment such as zakat and donation. The second stage was data verification. At this point, we cross-check the information given with documents such as salary slips, loan statement, and bank record to ensure accuracy. Where certain documents were unavailable, we made reasonable assumptions to keep the profile realistic and practical. The third stage was the tax assessment using the Income Tax Act 1967 and the 2024 Relief Schedule. We calculated the taxpayer's chargeable income tax and payable, which is this process include the computing total income, applying deduction and relief such as self, spouse, child, EPF, insurance, and zakat. Finally, applying the progressive tax rates to determine the total tax payable. Next, we carry out the analysis and recommendation stage. Here we reviewed the taxpayer tax liability in relation to his financial profile and suggested the possible tax planning, the strategies to optimize relief and reductions while ensuring compliance with Malaysian tax law. And finally, in the report preparation stage, we compile all the findings into a structured report. This included the taxpayer's financial profile, step-by-step calculations, and our recommendation. We also added appendices with assumption and supporting data to provide clarity and transparency.
Thank you, Aman, for the methodology. So now I'll move to the financial profile. So we decide to interview Mr. Amiruddin as our subject. And then Mr. Amiruddin is an employee in the banking industry as a banking officer. So the monthly salary is RM 6,500. He has a wife and 12-year-old son. During the interview, he said that they both have determined their type of assessment is in joint. And next, his wife has a career as a school teacher and has a salary of RM 3,000 per month. So from the table, the asset of my Mr. Amiruddin has saving of RM 35,677. So they also have a goal as a saving, which is invest in public gold of RM 3,225. And finally, they have a jewelry in the form of gold of RM 1,250. All these gold assets will be subject to the zakat on them. Next, we move on to income tax assessment. The first step, we need to identify the total annual income. As we know, he decided to declare his tax as a joint assessment type. As you can see from the table, Mr. Amir has a salary of RM58,000 per year and has a bonus of RM1,000. And his wife has an annual income of RM36,000 and they get dividend income of RM450 per year in SSP. So the total up is RM150,450 ringgit. So that's all for me. I will pass to the net presenter.
So now let's move to the income tax assessment. Income tax assessment is the process of calculating how much tax is an individual must pay each year. In Malaysia, it is managed by LHDN under the Income Tax Act 1967. The tax payable is determined after considering reliefs, deduction, rebates and incentives. For Encik Muhammad Amiruddin, there are 4 main steps to determine his income tax. For the total income, referring to the table 4.1, Mr. Amiruddin, a bank officer, earns 78,000 salary and 1,000 bonus annually. He has no business or rental income but gains RM450,000 from ISB. Since he chose joint assessment, his wife RM36,000 teacher salary is added. Thus, this total annual income is RM115,450 ringgit. Next, allowable deduction and relief. Mr. Amiruddin is eligible for several allowable deductions that help lower his taxable income. He can claim RM9,000 for self-relief, RM4,000 for wife relief as the head of the family, and RM2,000 for child relief for his 12 years old child. In total, he is entitled to RM15,000 in deduction, which will reduce his overall taxable income. Meanwhile, for the chargeable income, after calculating all sources, Mr. Amiruddin total annual income is RM115,450. From this, he entitled to RM15,000 in allowable deduction and reliefs, which help reduce his taxable amount. Therefore, this chargeable income is RM100 and 100,000 and 415 ringgit, and his figure will be used by LHDN to determine the actual income tax he needs to pay. Lastly, tax payable for the assessment year. Based on the amount obtained, the 2024 LHDN tax rate is applied to calculate Mr. Amiruddin's income tax. With a taxable income of RM100,450 ringgit, it falls under the PE form category and is subject to a 25% tax rate. The total tax is RM9,513 ringgit, calculated as 9,400 for the first, RM100,001 ringgit, and RM113 ringgit for the remaining of RM449 ringgit at 25%. After deducting the zakat rebate of RM3,111 ringgit, the final tax payable need to pay by Mr. Amiruddin is RM6,402 ringgit. By applying the available relief and zakat rebate, Mr. Amiruddin's tax burden is reduced significantly, ensuring he only pays the fair amount required by LHDN.
For the recommendation part, our group has identified several tax planning strategies that could help Mr. Amiruddin reduce his debt liability and at the same time strengthen his financial position. First, he should maximize all available tax relief such as personal, spouse and child relief, as well as lifestyle, medical and insurance claims. By fully using this relief, his chargeable income can be reduced. Second, zakat and charitable contribution should be prioritized. Zakat on income and savings is recognized as a tax rebate, which directly lowers tax payable while also fulfilling his religious duty. Donation to approved organization provides similar benefits. Next, he can take advantage of tax-efficient savings such as the private retirement scheme, with a relief of up to 3,000 ringgit, and the SSPN education saving plan, which allows up to 8,000 ringgit. This option both reduce taxable income and improve his family's financial future. In addition, a proper debt management is important. With housing and vehicle loans, he should prioritize repayments and avoid unnecessary financial strain, which will allow more funds to be directed into savings and investment. Lastly, good record keeping is essential. By keeping receipts and supporting documents, he can make the tax filing process smoother and avoid mistakes or penalties. In conclusion, by maximizing relief, paying zakat, investing in private retirement scheme and SSPN, managing debt and keeping proper records, Mr. Amiruddin can improve both in his tax efficiency and overall financial stability. Next, I will pass to the next presenter.
Now I will talk about what we have learned from making this assignment, which is number 1 is tax as a financial management tool. Tax functions not only as a statutory obligation, but also as an important financial management tool that can help individuals and families plan their finances more effectively. By understanding how tax laws, deductions, rebates and reliefs work, taxpayers can reduce their overall tax liability while making better use of their income and resources. Next, the importance of financial literacy. Financial literacy plays a crucial role in helping individuals manage their taxes effectively. By understanding these provisions, taxpayers can make informed choices about how to structure their spendings, savings, and investments in ways of both legally compliant and financially beneficial. This awareness not only minimizes the burden of taxation, but also empowers individuals to allocate their resources more effectively. Last but not least is need for discipline, especially when it comes to taxes, as proper record keeping and regular accounting helps prevent mistakes and ensure accuracy in reporting. Without organized records, individuals may struggle to provide the necessary documentation for tax planning, which could lead to missed opportunities for reducing tax liability. Consistently updating financial records allow taxpayers to track income, expenses, and liabilities, clearly making the tax filing process smoother and more reliable. This practice not only reduces stress during tax season, but also builds a habit of accountability and transparency.